Most people spend decades working hard, saving every penny, dreaming of the day they can finally say, "I'm retired." But here's the truth. Most people never feel truly ready. They wait for the perfect year. They wait for the markets to stabilize, for inflation to cool down, for their kids to settle, or for the economy to look better. But what if I told you that this year, not next, not 5 years from now, might actually be the best year to retire? I know that sounds bold, because everywhere you turn, people are saying the world's uncertain, that things are too expensive, that the economy is shaky. But in reality, when you dig deeper, this moment in time offers one of the most balanced and strategic opportunities to finally step into the next chapter of your life with confidence, stability, and freedom. Let's talk about why. First, let's start with something most retirees overlook: the emotional timing of retirement. Most people think retirement is purely a financial decision. How much money do I have? How much will I need? How long will it last? But the truth is, timing retirement isn't only about numbers. It's about energy. If you've been feeling mentally exhausted from years of work, if your health and motivation have been dipping, that's a signal most people ignore. The best retirement years aren't chosen from spreadsheets. They're chosen from self-awareness. And this year, for many people, that awareness has never been sharper. After the pandemic, global shifts in work, and financial uncertainty, millions have realized that waiting for a perfect time means never stopping at all, because perfection never comes. And this year, the balance between opportunity and preparation is finally tipping in favor of the retiree. Economically speaking, we're in a fascinating window. Interest rates are high, but that's not always bad news. For retirees, it means savings accounts, CDs, and low-risk investments are paying more than they have in over a decade. Many people who retired 5 or 10 years ago earned almost nothing from their savings accounts. Today, even conservative savers can earn meaningful returns while taking less risk. That's something rare. At the same time, inflation, while still present, has cooled from its peaks. It's stabilizing. That's giving retirees a clearer picture of their future expenses. Planning retirement during a moment of predictability is always easier during a storm. And right now, the storm clouds of the last few years are finally thinning. But beyond the numbers, let's be honest. Most retirees say the same thing. They wish they had done it sooner. Why? Because the early years of retirement are the healthiest, most energetic years you'll ever get. Waiting too long, often spending your best health years still behind a desk. You can always make more money. You can't make more time. That's what makes this year so special. It's a year where both the financial environment and life awareness align. People are more conscious about what truly matters. They've seen how unpredictable life can be. They're realizing that peace, time, and freedom have more value than another few $1,000s in the bank. And let's not forget technology. Retirement today isn't what it was 20 years ago. This year, retirees have access to better financial tools, clearer market information, and safer, more flexible ways to invest and manage money. You can track your expenses from your phone, manage your pension online, compare insurance instantly, and even consult financial advisors virtually. Retirement has become more convenient and less confusing than ever before. The average retiree today is more empowered than at any point in history. You don't have to sit with a pile of paper statements and wonder what's happening. You can control everything from one place. This empowerment makes 2025 one of the best years to retire, not because it's safe, but because it's simple. Simplicity brings clarity, and clarity brings confidence. Now, let's talk about opportunity. When markets are uncertain, many people panic. But history shows that some of the best retirements start during times of uncertainty, not during times of boom. Why? Because when things look too good, prices of everything, homes, travel, insurance, go through the roof. But when people are cautious, opportunities quietly appear. For example, many housing markets are cooling off right now, If you've been thinking of downsizing or moving to a smaller, more peaceful place, this year offers more negotiation power than in years past. This same principle applies to travel, too. The cost of travel has normalized after a few years of chaos. If you're dreaming of visiting those places you've postponed for decades, this might be your first real chance to do it affordably and calmly.
And let's talk about healthcare. In 2025, healthcare access, especially digital and telehealth options, has reached a point where retirees can access advice and prescriptions without even leaving home. This isn't just convenience, it's security. Retiring when healthcare access is expanding is one of the smartest moves you can make. But there's another reason, one that's often invisible on paper. Retirement, at its core, isn't about money, it's about control. For decades, you've traded your time for paychecks. Retirement is the first time in your adult life where your time is truly yours. Every day you wait, you're delaying the freedom you've already earned. And this year, more than ever, people are waking up to that truth. We're living in a time when family connections, simple joys, and time spent doing meaningful things have regained their value. Many people are saying, I just don't want to keep waiting for the future. I want to start living it. And that's why this year might be the best year for you to finally retire. Because for once, the math and the meaning align. The numbers make sense, the opportunities are there, and your life, right now, is calling for a slower, more intentional pace. If you've been doubting, questioning, or hesitating, ask yourself this: what exactly are you waiting for? Is it a perfect economy, a magic investment, or simply the courage to say, I've done enough? Because if it's courage, you already have it. You've built a lifetime of experience, discipline, and resilience, and this year might be the one where all of that finally pays off, not in dollars, but in peace.
Now, let's talk about why the numbers finally make sense in 2025. If you've been paying attention to the markets, you already know that the last few years were a roller coaster. Record inflation, soaring interest rates, volatile stock prices, and a housing market that made no sense at all. But here's the thing. For retirees, 2025 is when the tide turns. Let's start with inflation. For the first time in years, inflation is cooling down to near normal levels. That means your retirement income, whether it's from Social Security, pensions, or investments, finally holds real value again. Your dollar stretches further. You're not losing purchasing power every time you go grocery shopping. But here's the real beauty of this. Because inflation is easing, the Federal Reserve has started signaling possible rate cuts later this year. And if you've been following this closely, that's huge. Why? Because falling interest rates affect nearly every corner of retirement planning. When rates go down, bond prices go up. That means if you hold fixed income investments, like treasuries, municipal bonds, or annuities, their value increases. Your portfolio suddenly looks healthier without you having to lift a finger. And on top of that, stock markets tend to perform better when interest rates drop. The cost of borrowing becomes cheaper for companies, profits grow, and that fuels optimism among investors. Historically, after a period of high interest rates and inflation, the years that follow often deliver strong market recoveries. That's exactly where we are right now. You're not entering retirement in chaos, you're stepping in just as stability is returning. Think about it. Markets are rebounding. Inflation is stabilizing. Interest rates are softening. It's like the perfect alignment of stars for retirees. Now, let's talk about Social Security, because this is one area where timing matters more than people realize. In 2025, Social Security benefits are expected to see a significant cost of living adjustment, COLA, likely higher than pre-pandemic averages. That's great news. But what's even better is that the COLA from 2024, combined with the stabilization of inflation this year,
gives retirees an advantage most people overlook. You're earning more without losing it to rising prices. That extra bump in benefits will actually stay in your pocket. It's not being eaten up by runaway inflation like it was a couple of years ago. And if you're one of those who delayed taking Social Security to maximize your payout, congratulations! This might be the perfect year to finally claim it, because the economy is stabilizing and the purchasing power of your benefit is now more predictable. But there's another angle most people miss: taxes. Taxes are one of the biggest retirement killers, and here's the thing: we're in a historically low tax environment right now. The current tax cuts are still in place, but they're scheduled to expire soon in 2026. That means this year and next are your last windows to take advantage of lower rates for conversions, withdrawals, and income planning. For example, doing a Roth conversion this year might be far more tax efficient than waiting a few years when rates are likely to rise again. Imagine moving money from your traditional IRA into a Roth while paying today's low tax rates, and then enjoying tax-free withdrawals for the rest of your retirement. That's why many retirement experts are calling 2025 a sweet spot year for wealth preservation.
Now, let's go deeper into another big reason why this year stands out: the housing market. For a long time, retirees who wanted to downsize were stuck. Home prices were high, mortgage rates were even higher, and buyers were hesitant. But 2025 is showing early signs of balance returning to the market. Rates are expected to ease, and as that happens, more buyers will enter the market again. If you've been sitting on a valuable home, this could be the year to finally make your move. You could sell at a strong price, move to a lower-cost area, and free up hundreds of thousands of dollars in equity. That money could easily fund a big part of your retirement, or give you the financial freedom to enjoy it the way you've always wanted to. And the best part? Downsizing today doesn't just save you money on the home, it saves you on property taxes, maintenance, and insurance. It's like unlocking hidden cash flow that's been sitting in your house all these years. All of these factors, the economy, inflation, interest rates, taxes, and housing, are aligning in a way that doesn't happen often. Retiring this year isn't about luck, it's about understanding timing. Because in personal finance, timing isn't everything, it's the only thing. And 2025? This is the year where the timing couldn't be better. But before you decide, there's something else you must understand. What's changing with investments and retirement returns? Because while this year offers opportunity, it also brings a shift in how your money needs to work for you. Now, let's talk about dividends and growth stocks, because this is where retirees can get a perfect blend of stability and upside. The companies that struggled during the inflation spike, the ones that had to deal with high borrowing costs, are now recovering. Dividend-paying stocks, especially in sectors like energy, utilities, and healthcare, are regaining strength. And here's the thing: when rates go down, these companies typically see their stock prices rise because investors start chasing yield again. That means your retirement portfolio doesn't just sit still, it grows, slowly but surely. But the biggest advantage retirees have this year is flexibility. The economy isn't overheating, markets aren't overvalued, and there's a calm window right now, a rare moment where you can plan ahead without constant economic shocks. You can adjust your strategy, rebalance your portfolio, or even delay claiming benefits for an extra boost, all while the environment supports you instead of working against you. Now let's touch on something more practical: expenses. The cost of living is still high, yes, but it's no longer unpredictable. In retirement planning, predictability is gold. When you can reasonably estimate your future expenses, from groceries to healthcare, you can plan your withdrawals and budgets much more effectively. In 2025, we're finally in a place where retirees can make long-term projections again without worrying about another sudden inflation spike or massive interest rate jump. That stability changes everything. And speaking of healthcare, this is another area where 2025 is shaping up to be favorable. The Medicare adjustments this year are relatively moderate compared to previous years, And many states have expanded access to supplemental coverage options. That means you can protect yourself better without your premiums skyrocketing. It's not just about saving money, it's about reducing risk. Medical expenses are one of the biggest threats to retirement security. But this year, retirees have more tools and options to manage that risk than ever before. And then there's the psychological factor that no one talks about. For years, people delayed retirement because of uncertainty. Markets crashing, inflation soaring, political instability, job insecurity. It's been a stressful few years. But in 2025, for the first time since the pandemic, there's a sense of recovery, of balance returning. People are starting to travel again, communities are opening up, and life is normalizing. That emotional stability can't be measured in dollars, but it makes a huge difference in how retirees experience life. Because retirement isn't just about money, it's about peace of mind. This is the year where you can retire with both. Now, I know some people are thinking, what if I retire now and the markets drop again? And that's a fair question. But here's the truth. Markets are always uncertain. What makes this year different isn't that everything's perfect, it's that the risks are finally balanced by strong fundamentals. You've got stable inflation, positive earnings growth, higher yields, and improving consumer confidence. Historically, those are the exact conditions that fuel multi-year bull runs. So if you retire now, your portfolio has a much better chance to grow in the early years of your retirement, which, as every financial advisor will tell you, are the most crucial. But before you make any decisions, there's one last factor you must consider: the opportunity window that's closing soon.